Welcome to a very special edition of the Noted Bitcoin podcast. We're here for the Bitcoin Magazine 2020 Halving Party, and we're very excited to be counting down to what may be the most important event of certainly this year, but quite possibly this decade. And I'm joined here with my co-host, Michael Goldstein. Michael, how are you?
Doing well. Family has webcam because of quarantine stuff, so people can't see my quarantine caveman look, or, no haircut until 100,000.
Yeah, 100,000 is, I actually think that I will cut my hair if it drops below $1,000, because I'm trying to keep it, and I've grown a liking to it. Maybe we'll start, like, how historical events impact fashion and trends. We'll see a very strong return of the beard because of the quarantine. Gave me an opportunity to grow mine out. Although it's very patchy. So what does
Yeah,
that say about me?
the state won't let me get a haircut right now. And of course, there's the position you hold, which is you should just cut your own hair. But then why not take it further? It's like if you just don't even cut your hair, you can save that 5 minutes or however long it takes to, buzz your head and go work more and stack more sats.
Yeah, it's also a sign of vanity to care about your appearance, and so I would argue that the people who are spending lots of time cutting their own hair, it shows poor character. They're a person of low character.
We need to see more Bitcoin monks that have the top of their head shaven off, and
Yes,
that's it. Fire Haas, so
deliberately
you got that
unattractive.
going on.
Yeah, repellent.
No. You see, Bitcoiners are purposefully unattractive. It's
Yeah,
purposeful, guys.
it's constantly signaling. Yeah, so thank you to Bitcoin Magazine for inviting us to do this virtual conference coming up to the halving. And I went to the Bitcoin halving conference in San Francisco last year. That was a lot of fun. So it was really disappointing to have that be canceled due to, frankly, the communists. If we're if we're going to be blunt about it, I know that there's a lot of people out there who say that we should not criticize communists, but my view is that they've killed a lot of people and they continue doing it.
Yes. And which group of communists, you may ask? All of them.
All of them. Is there a hammer? Is there a sickle? Like there's only so many ways to slice and dice that one. Yeah, so hopefully the conference will get rescheduled to later this year or next year.
I mean, perhaps the communists are taking a sort of like Marxist accelerationist position. Marx kind of saw capitalism as a means to get to the proletariat awakening and uprising or whatever. So it's like, if we can just tee up, we're in a position right now where capitalism is sort of falling apart in a way because it's been totally ruined by crony capitalism. It's not even what any of us are referring to when we use the word, but we're also on the precipice of Bitcoin, which means like just hyper capitalism in all of the best senses. So it would make sense for them to want to bring upon, like, tee up the greatest, entry for Bitcoin possible, so that we can reach that, golden age of Bitcoin capitalism, and then somehow do whatever they're trying to do.
Yeah. I guess, yeah, I do think, yeah, Marx wanted peak capitalism and that would cause the transition, But I think the problem in the hole in their logic is that they are currently the ruling class. And so they're going to get overthrown. Because now they're the bourgeoisie, right? They're no longer the revolutionary vanguard.
So I guess what they didn't see was the Bitcoin plebeian uprising.
Yeah, exactly. So I do think that if we look ahead over the next 4 years, but also 40 years and 400 years, the Bitcoin plebes are actually like a apolitical force. and quite a powerful one when you look at what they have in their arsenal, both from a economic perspective, but also from a mimetic warfare perspective. There's just nothing like it right now.
Yeah, they've been battle hardened, and on top of that, they have pretty strict, kind of worldviews, and
Yeah,
they have the mimetic defenses for it. So
yeah, nothing and nobody is off limits. I've been attacked by plebes. I'm sure you have as well.
yeah, I've
Uh,
got in my share.
I think the taco thing is actually against you and Safedin's carnivory, is what I've heard.
Yeah, although try having like a vegetarian taco, I can't imagine it's as good. So
You gotta have beef in your taco. I get that, they're not all about, beef only, but you gotta have beef in there.
yeah, and hey, like I get tacos. I'm from Central Texas. I'm not anti taco. I just don't eat them myself.
Yeah, and we don't pretend that they're healthy for us. You gotta get your fiber. So yeah, so I think that geopolitically, and Bitcoiners as a whole, not just the self-identifying plebes. Um, and now I wonder, is there less Bitcoin ownership per capita in some countries versus others? And especially in countries like China, where the government has tried to put a damper on Bitcoin adoption. I think that once again, the communists are mucking it up, and it's going to really hurt the Chinese people that they don't have as much distribution of Bitcoin through their population. That's pure speculation on my part. They might actually be ahead of
Mhm.
us in terms of ownership.
The interesting thing there is the fact that Safedin writes about the monetization of gold and how gold became the dominant force, and one of the countries that was hit hardest by this, as he described, was China, because they were heavily invested in silver as money. And so once again, if they're going to hold on to their whatever digital yuan they're trying to make in light of Bitcoinization, that could be quite a problem. And on top of that, Bitmain was, they got rid of so many Bitcoins, like such an enormous opportunity cost of giving up Bitcoins in the sort of fight against the so-called small block Bitcoin. Something to consider is that any big profitable company in China is likely going to be in some way controlled by the Communist Party. And so if that's the case, then
Whoa! Hold on, Michael. You're saying that the Communist Party controls the means of production?
what?
What?
So that
No,
means that,
guys, that's a conspiracy theory. Come
I
on.
mean, it's like China themselves, may have almost like willfully given into a shitty fork of Bitcoin and given up their future potential because of that. And meanwhile, I think, yes, likely so, that Americans have a much more dispersed um, ownership of Bitcoin. And I think that bodes well for this country's future, our country.
Yeah, and the other thing too is that even if there are, let's say, Chinese individuals who own a lot of Bitcoin, um, that doesn't really help with their government if the seizure resistance holds up. And so if these individuals are able to get out of the country, if the government, the Communist Party really becomes even more tyrannical, or they are able to use their monetary resources to change the Chinese government, and either put in Communist Party officials who are pro Bitcoin, or in the spirit of decentralization, abolishing the central Chinese Communist Party, and instead splitting up into provinces that are autonomous, and making better decisions, and that perhaps some of those provinces would end up being very friendly towards Bitcoin, and there would be Chinese citadels.
Yeah. And meanwhile, I mean, I think all of
Yeah.
this, comes together. This is not off topic for the halving, because I was listening to the really fantastic episode of Stefan Levere podcast with Saifuddin and Plan B. And Plan B thinks that the sort of next phase in his metaphor now of the cross asset model of stock to flow, the next sort of phase of Bitcoin, he suspects will have something to do with sort of the geopolitical awakening of Bitcoin, in the sense of all the people who, it's not just like, it's not just the gold bugs, then it's not just like the financial people, but now geopolitical thinkers who are thinking on a macro global scale of how, different resources and governments affect, these big international issues, will come to realize how important Bitcoin is. And so these questions matter.
Yeah, absolutely. I mean, it's an asset that just has fundamentally different properties than any preceding asset, and I think any future asset. I don't think that there's going to be something that surpasses it. From the perspective of censorship resistance, seizure resistance, permissionless, and of course the sound monetary policy. And it's just a matter of like these geopolitical strategists catching up to that fact. And
Yeah.
also Bitcoin reaching a certain level of liquidity to where now it actually is a practical possibility for a government to buy $1 billion worth of Bitcoin, as part of their long-term reserves.
Yes. And that's of course interesting because they wait until it's practical. 1 billion might not buy you nearly as many Bitcoins as it would have earlier on if you had the foresight to think in terms of long tails.
Yeah, and it's it's part of it is a data problem. So like because of Plan B's work, because of others doing kind of the price data analysis piece, it reaches a certain type of person who cannot assess qualitative fundamentals and must have numbers, right? And those individuals, a lot of them, like they work in finance because they're attracted to numbers, but they also do work in like the consulting type things. And it's once you have the historical price record and you can show, okay, here are kind of the ranges in which the price can go, you transform the uncertainty about Bitcoin's future value into price risk, something that can be modeled using statistical methods, and further, something that can be priced in the derivatives markets, and thus you can actually hedge and get rid of the volatility. And so even a government that is like, well, Bitcoin is too volatile for us, we don't want it in our foreign exchange reserves. What we want is a stable asset that is censorship resistant, seizure resistant, permissionless, and does have some scarcity to it. Well, you can still construct that asset without volatility by combining holding, actual Bitcoin, not your keys, not your Bitcoin, and also buying puts. And so basically what a put will allow you to do is that if the price goes below a certain target, then we're allowed to sell our Bitcoin for a fixed dollar value at that target. And so it eliminates the downside risk. Now, obviously, you have to pay that insurance premium, but the fact that it is an insurable risk actually is really notable because the Austrians talk a lot about the difference between uncertainty and risk, and
Yes.
in monetary economics, holding a cash balance is not about risk, because you can actually just go and buy insurance for that. You don't need to hold cash for that. it's about hedging against uncertainty and uncertain future cash flows. And when you think about like what causes uncertainty in a monetary system, well, okay, it's not the exchange rate, right? Because we've already determined that that causes risk. It doesn't cause uncertainty. What causes uncertainty in a monetary system is uh, civil asset forfeiture. You know, banks freezing your bank account. Like you can't insure against those risks. And you know, or sorry, you can't insure. Those are not risks because they are not insurable, right? They are uncertainties. Um, and if you look at from the perspective of Bitcoin's just fundamental properties, they're all about minimizing the uncertainty. And so when you run a full node and when you've got a Blockstream satellite hookup and all of this, you know, uncertainty mitigation in place, you really have, and obviously on the private key holding side and seizure resistance of your seed and hardware wallets or whatever, what you've constructed is an asset that has less uncertainty. Obviously, it still has uncertainty, but it has less uncertainty than any other asset that we know of. And so I think that, you know, looking at it through that lens, you already have in 2020 the premier monetary asset that everyone should be holding. And whether they are worried about volatility or not is kind of a separate question about how they're going to manage that very specific risk and what, you know, products are available to them for that. But that's really unrelated to Bitcoin. You know, Bitcoin's exchange rate volatility exists outside of the Bitcoin system. The only other uncertainty or risk that I think, you know, in the Bitcoin system that is endogenous to the Bitcoin system that we don't discuss enough is the transaction fee risk or uncertainty, because actually I don't think that we do have enough data in order to quantify it into being a risk that can be hedged. Right now we have really primitive form of hedging with layer 2 solutions, right? Lightning and Liquid are, in my view, Bitcoin transaction fee on-chain derivatives. And that's something that maybe as we look towards the next reward period of the next 4 years, now that we have kind of the price exchange rate risk figured out, it's going to be more about figuring out the transaction fee risk and the pricing around that.
Right. There's a lot of questions around, you know, sort of at scale when everyone's trying to, you know, trade the Bitcoins. How much can you expect to be paying at a given time? As well as, you know, like with Lightning and whatnot, find ways to kind of get around that by like paying a fee up front so that you can do all kinds of transactions rapidly. And unfortunately, like, you know, most of this halving period, this era, you know, you could get away with a Satoshi per byte. So there wasn't really a pressure to be figuring that stuff out, although it's much better than it used to be. And the last bottleneck really helped develop, you know, batching, understanding the value of SegWit and all sorts of, you know, other stuff that, you know, there's still actually a big problem with exchanges basically spending way too much on transaction fees, and that kind of hurting everyone else who was wanting to put in a transaction. Although, you know, the exchange, they're willing to pay that price apparently, rather than, you know, pay the engineers to save them that money. But in the future, that might not be as tenable for them. And I think at scale, more of those bottlenecks are going to come across, and people are going to be able to figure out, you know, the actual fee rates they want to pay and on what time schedule and how they might want to, you know, space out their transactions to best get transactions into blocks when they need them.
Yeah, and it's interesting to note the parallels between the I want a word for fiat shills whose hangups are about volatility. So like they're stable coiners, I don't know. We got to think of normies.
I mean, we could call them turkeys, like
Simps.
The Telebian turkeys who
Yeah.
think like everything's stable until it's not,
Yeah.
and so it's which is more about their own perception of their currency rather than Bitcoin. So it's like they overestimate how stable their currency is.
Yeah, that's right. And I think that what they're doing is that they are more risk averse than they are uncertainty averse. And so for them, like they want to minimize risk at all costs. What they don't understand is that the at all costs part creates tremendous uncertainty. And we're going to see this fiat monetary experiment, display some uncertainty. But I want to draw the parallel between those anti price volatility people and the anti on-chain transaction fee volatility people, right? Where they have their main critique of Bitcoin is that they're worried about the future costs of on-chain transactions. And I think that it's kind of the same risk aversion problem, is that they are so risk averse that they want to minimize the transaction fee risk at all costs, despite that increasing like uncertainty, about Bitcoin's scalability, right? And the ability to stay decentralized.
Yeah, that's a very good point.
So I think that they got to get over it, and the only way they'll get over it is with time, as more data comes in, more price points come in, and at that point it'll be too late. They'll be like, all right, now that Bitcoin is, I can hedge away the price volatility, I can hedge away the transaction fee volatility. Now I'm ready to get into Bitcoin. At that point, maybe there won't be an exchange rate. Maybe that will be at full adoption.
There's a set of people who like to troll Bitcoin maximalists from a Austrian position. Not that I think that they have a good Austrian position, but that's what they're trying to use the same literature that we've read and that made us Bitcoin maximalists in the first place, and try to use that against us. And they'll pull up stuff from Menger. And I was revisiting Menger because I was thinking about these types of arguments. And he looks at the saleability of a currency as covering many dimensions, which I think is very much true. And I think what happens is, and I think they don't even understand this when they're making these arguments, it's like they're hyper focused on one particular dimension of that, while I would argue that Bitcoin maximalists tend to have a more holistic view, which is like, yes, like you can increase the dimension of the sort of time aspect, and in the sense of being able to get a transaction in at a given time. But we also want to like have the certainty over all time that my proportion of the Bitcoin economy is actually what I think. And I'm willing to wait longer for a transaction knowing that. And so this is like that's an uncertainty that we can get rid of. And yes, it has a higher cost, but that might be totally fine.
Yeah, and on the saleability argument, like my view is that, again, it goes back to like what you're trying to accomplish with money. And if holding a balance is about minimizing uncertainty, then saleability, you're going to want to have the least amount of uncertainty about saleability, right? And so in terms of time, like to me, that means that you're going to have the highest chance of finding a buyer for that asset at some point in the future. And with the internet, like, yes, you can find a buyer for your Bitcoin 24/7, 365, and you can send those Bitcoin with final settlement, an average of 30 minutes. So from a time perspective, like that's just and the other thing on the
But they're saying, I mean, their point is that
yeah,
that price of doing that will become so absurdly high that
right,
most of them wouldn't be able
but
to do it.
that's a risk, not an uncertainty, and
Right.
and
Because
that's
you can pay that price. Even if you say, oh, the transaction fee is more than a cup of coffee by orders of magnitude, even,
yeah.
technically you can still do it. It's just, is it actually worth it to you to have to pay that big of a fee?
It would be an uncertainty if it was like miners randomly ignore 20% of transactions and you can't resubmit. So it'd be like, all right, here we go. Let's go play the transaction lottery. Uh, but no, it's a market, and getting outbid by someone else is a risk. But if you look at the history of Bitcoin, like, okay, we don't have a lot of great data, and so that's why I hesitate to say that it's insurable at this point, because there's just not enough numbers to run through an actuarial model, essentially, right? But I'll tell you what, it was December 2017 is the only time where it was like, oh wow, that's really expensive, to send Bitcoin. And that was like $25, $30 per transaction, which sounds like a lot for people who don't necessarily have, a lot of Bitcoin. Um, but for those who were, actively trading and arbitraging between exchanges, like, they're used to paying those kinds of fees all the time, left and right. Like, to them, the bigger cost is going to be the slippage in terms of the price, and so it's more about the cost of liquidity than the cost of sending an on-chain transaction. Now, that was an extreme scenario. Like, that was on the S2F model. You're outside of two standard deviations. Like, in terms of the parabolic move. So to say that, like in their minds, and they still make this argument, they're like, they still think that today it costs $35 to send a Bitcoin transaction, like in
Yeah.
their worldview.
Well, and they also, the wallets that they tend to use are made by people who are not exactly fans of the Bitcoin community, and so they don't do a very good job of fee estimation, and they end up overcharging. So those wallet developers should also be looked at as like a source of well, hey, are there things that you may be able to do or that I can contribute that would help us like get the fee where it actually needs to be?
Yeah, because if you think about fee estimation, you're basically talking about, okay, how do we create a quantitative model to forecast future fees? And so, you might be forecasting fees in the next block, or, fees in the next day or in the next week. And right now, that forecasting model is very rudimentary. In Bitcoin Core, it actually only looks at, as far as I know from the latest I've read, is that it looks at uh, transactions that have already been included in blocks. It does not look at the mempool. Part of the concern there is that miners would be able to game the mempool, but I think that that forecasting model is going to become increasingly sophisticated. Right now, I think it's still a first iteration. Well, it's not the first iteration, because I know it's been improved a lot.
It's also like, how can you start to model it out so the miners can't game it as well?
Well, so if you use on-chain, transactions that are already been included in blocks, miners can't game that, because
Right.
the revenue would go to other miners statistically. But what you can do is, if you're looking at both on-chain and the mempool, you can start creating some heuristics about whether to fall back to on-chain if you think the mempool is being manipulated. And I think that it's the reason that fee estimation has not improved on the Bitcoin Core side is simply because fees have been so low. And so there's not really a huge, as you were saying, like, not a huge incentive to go in and improve that part of it. But it will improve as competition to get into blocks increases over the next reward period.
Absolutely. And the other, egregious error that people who are risk averse to transaction fees, they tend to um, uh, use dollars as their unit of account when looking at transaction fees, which is also ironic because they accuse Bitcoiners who are obsessed about number go up as being as not using Bitcoin as their unit of account. It's like, oh, you're still in the fiat mindset because you just want to make more fiat. And it's like, no, that's a proxy for us understanding like how much of the global economy we've eaten up so far. But to do that in dollar terms, if you actually look at the transaction fees in Bitcoin terms over time, it's kind of gone down a little bit. It's like it's not a very steep downward trend, but there is a downward trend. And the example that I've enjoyed sharing before is the transaction when Jerkos sold pizzas to Laszlo for 10,000 Bitcoins. That transaction had a fee of 1 Bitcoin.
Outrageous.
So, yeah, that's like we are paying nothing in fees compared to Laszlo.
Yeah, and I also when I first sent a Bitcoin transaction and paid a fee, I was upset that I was paying a fee. I was like, this is free and open source software. How dare they charge me a fee for using it like this? I need to. And then I started poking around to figure out how to set the fee to 0 because I was like, I will not let myself be scammed by these developers because they had like a hard-coded minimum in there. And I was very suspicious of it that, they were skimming off the top here. And so I think that there's like a natural gut reaction against fees because it is this free and open source software that you downloaded from the internet, and you never, you might have a donate button, but not a fee button.
Sorry, continue.
Oh, well, the other, so I think that part drives some emotional anger against transaction fees and leads to all these rationalizing arguments. The other thing that also drives that is people who are very risk averse with regards to transaction fees resent the fact that others are not so risk averse and that others are perfectly willing to self-insure that risk, right? And, take care of their UTXO set and be conscious of the risk and properly manage things so that they don't have any problems in terms of future spending. But so that I think upsets some risk-averse people too.
Yeah, I think too, even that, I mean, I can understand the not enjoying middlemen because, you start to look at how middlemen are everywhere and it gets really upsetting realizing like, this person skims off 2% and then someone else is skimming off 2% of that and so on and so forth. And you realize like how much money is lost because of, complete nonsense like this. And it's just like, it's very parasitical. However, to think of even, things like, Visa or, other payment methods and all this, thinking of their fees versus how Bitcoin operates. Bitcoin is a very straightforward thing. Like, what you're paying the fee for. And over time, hopefully we'll be able to model out what that fee actually is better. But like, Visa, like you have like the fee on the merchant, and then like that fee itself is built on all kinds of other like baked in stuff. It's just like this like endless mass of people trying to skim fiat off one another. And Bitcoin is just like, here's the fee. It's in a block. Now it's done.
Yeah, good luck finding like what the fee rate is for Visa, and figuring out.
Goldbugs can't even tell you what the fee rate is for moving gold across continents. So,
oh man, let's get into gold. Let's get into gold.
Barbarous relic. Pain was right, finally.
Okay, so I wouldn't go so far as to say that, but I do think that we were talking about China and silver getting demonetized back in the day. I think that gold is going to be demonetized by Bitcoin as well. Now, obviously, I think that the dollar is also going to be demonetized by Bitcoin, along with bonds, stocks, real estate, insurance, name it. I think that Bitcoin is going to have a hyper deflationary effect on it. And so you know, I people were like, Pierre, you should be nice to the gold bugs because they are so close to us ideologically. And it's like, all right, but I'm still going to make the argument that Bitcoin is better than gold. You know, like that's still the reality, and I'm still going to defend that. Um, and
Right.
I'm not going to like put on the kid gloves for a specific asset due to ideological affinities.
Right. And, they're not afraid to, like, they talk about, I'm sure they try to talk about the ways in which gold is better, which I assume just comes down to physical nature
Well,
of it. And well, actually, I'll
yeah.
also add because it's hard to transport, that does make it harder to steal. Once you've accessed, if you've accessed the private keys of gold, that is to say the vault, it is much easier to steal than Bitcoin. But with Bitcoin, it's much easier to conceal those private keys.
Yeah, yeah. We could get into heist logistics too. That would be
That's an interesting topic. But the
yeah.
point is, like, we have to sit here and think of the ways in which gold is like actually better.
And it's funny because like that what kicked off this animosity was that Dan Hell tweeted out, "Gold is old," which hey, that's a great meme right there, and it's not wrong.
Isn't that the argument for gold?
Yeah, right. That is the argument they make for
Dan,
gold.
why are you pumping gold?
Yeah,
one still has some other bags.
It's been around for thousands of years. It'll be around next year. Now, Dan Tapiero, who is like associated with Real Vision and I forget his name, Raoul Pal. So he was offended by this because he's like he's a gold guy, but he also likes Bitcoin. So he's big tent. Hey, let's have lots of gold and lots of Bitcoin, and this is going to be a really great future. And so he replied to Dan, listing out the advantages of gold. And I think that anytime someone lists out advantages of gold, of real estate, of altcoins, of USD, or of stocks, like they are putting themselves out there, and opening themselves up for criticism. So
line by line criticism.
Yeah, absolutely. They've made a substantive argument. That's my favorite thing in the world. Let's engage on it. Now, things start falling apart when.
Great, I didn't think you were going to bring back a substantive argument to against me.
It's like suddenly Twitter becomes the inappropriate place to debate this. And good day, sir. And they're also. I like when they get offended and they're like, "You should show some more respect towards me." It's like, well, I'm just making arguments out here, man. Like I don't know what to tell you. You need to show more respect towards me by responding to my arguments. Like that's how we show respect in my culture. But I think that people log on to twitter.com and they're like, you know what? I'm a very important person in my world. And so when I log into twitter.com, I expect to be a very important person there too. And no, the reality is that everything's fair game. Anyone can reply to you, and you really should not expect any amount of respect on Twitter. What you should expect is an extremely hostile environment that can only be brought into civilization through a process of blocking and muting. And then eventually you can build your own walled garden there. But it's going to depend on what your culture is. Like your walled garden is going to be filled with sycophants and uninteresting conversation if you don't want to engage in any substantive arguments, right? Like there are people like that. They're like, they don't want to argue on Twitter, which is fine. But I come onto Twitter to argue with people. Let's be clear. So if you find yourself in my crosshairs, go ahead and block me or mute me or whatever, and then I'll move on and argue with other people. I'm not going to insult you. Like, I'm not going to like attack your mother or anything, especially this close to Mother's Day. but I am going to argue about whether Bitcoin is better than gold or not.
Yeah, and it clearly is.
And
And
I am going to add little insults like calling you a gold bug and saying gold is old. Like that I'm fine with too, as long as it's somewhat related to the argument.
right, and making fun of someone for holding their bags and being upset about someone else not wanting to take your bags.
Yeah, that was a good one. Where basically he was saying, look, gold is important because central banks own it. And my response to that is, all right, well, I don't want to pump their bags. Like, I don't like central
Bitcoin's
banks.
important because we get rid of them.
Yeah, that's an argument for Bitcoin. Bitcoin is not as owned by government institutions, and frankly, you're telling me that a bunch of Keynesians that I despise ideologically own a bunch of gold. Like, that is a great argument against gold. I don't know why you would think that I'd be persuaded by that.
Right. That actually, like, that bodes better in a strategic sense for Bitcoin. The fact that you have just this like normie plebe. I hate to call them normies. I don't mean to call them that. They're not in the ruling elite class. All these plebes own Bitcoin versus like the guys that aren't even doing a good job at managing an economy, because you can't manage an economy. They're holding on to gold and running their fiat show. That gives a strong strategic advantage to a hostile minority who's extremely intolerant and ready to fight for, mimetically for what they believe in.
It also pragmatically is like, okay, so central banks are going to have to sell gold and buy Bitcoin. That's what you're telling me here. And if I think about what that does to prices, I'm still in the Bitcoin camp.
Right. And then any order of magnitude growth in Bitcoin also means an order of magnitude growth in the mimetic strength of Bitcoin, which it's just a constant feedback loop. And gold, they're right that it has this sort of Lindy aspect, and it has kind of held up. Gold is just what it was when Peter was like hating on Bitcoin or whatever. And now Peter Schiff is still hating on Bitcoin, and it's way higher, but gold is the same dollar price. So it's like, it's had some kind of hedge opportunity somewhere, I'm sure.
But only because there was not a better asset.
Right. And now there is. And it has way better strategies. So given all of this, that gold is just where it is and Bitcoin is where it is, I'm just like, look, Bitcoin is a more interesting thing. Gold should have had its moment already.
It did. The 19th century, frankly, was...
I meant like, modern, like, this the last couple of decades. Gold should have had its moment.
No, but I really do think that the U.S. dollar was better than gold, for long stretches of the 20th century, and that's what kind of prevented gold from reemerging.
Here's a thought that I was having about gold and fiat: is fiat actually harder to counterfeit? Now, you can obviously make the argument that the Fed printing money, that is a form of counterfeit, that's double spending, and thus blah blah blah.
Unauthorized.
Exactly. So by law, counterfeiting is everyone who does not have the legal monopoly.
Yeah.
So and in gold, of course, no one has a legal monopoly. Anyone can go mine gold, but it's also very easy to counterfeit in the sense that, like, I don't know if I can, like, people say, oh, you can just like go buy gold at your local dealer. It's like, yeah, sure, I can. But like, I have no ability to determine if that's actually gold. I don't have a full node. I don't have a gold full node. And so they could be totally counterfeiting me and I have no clue. And yet, if someone sends me a Chase Quick Pay, it's actually like, I kind of have a vague grasp on stuff. And I like, there's no telling, what the full, monetary supply of the dollar is or whatever, but it seems like harder to fake outside of the legal monopoly status.
Yeah. And something else that I picked up in the threads about gold is that not all gold is equal. And this is actually something that gets discussed in the ethics of money production with Holzman, is that you have mints, right? And these mints have reputations, and then over time you have different coins, you have different coinage of varying quality, and thus with discounts and premiums to their face weight. And so like figuring out all of this complexity ultimately undermines gold's liquidity compared to, for example, Bitcoin. And so like even if you go to the gold store, like, yes, the coin might be 100% gold. What if the salesperson kind of sells it to you at a premium when it should have been sold at a discount? Like you have no way of really knowing. Whereas with Bitcoin, like there's the price. You can go, look at different exchanges, but frankly, like no matter how much people talk about taint or coin analysis and whatnot, like I've never had any issues with it, especially if you're just buying it, right? If you're just buying Bitcoin from an exchange, you're never going to have problems with coin analysis, chain analysis, or whatever. That's only potentially a problem if you're selling on an exchange and thus, sending Bitcoin in.
Right. And so then, when there's businesses that don't have KYC and stuff, like, we could imagine that still there's going to be bottlenecks with the state where they try to do chain analysis, but that taint itself is something that is projected onto the coin rather than a sort of property that has to be tied to the coin in order for anyone to make use of it. Whereas with gold, it's like, yeah, if it doesn't have, the correct mint from this royal mint or whatever, I have no way of like being able to figure out, because this mint, they do these kinds of grooves on the side of the coin. So I can see that it hasn't been, worn down.
Imagine if an exchange was like, these UTXOs, they go out too many decimal places. So really, you got to have like, it's got to end in 0, 0.
Round numbers.
Yeah, we need round numbers in the Satoshis. There was this got split out into dust several transactions ago, and
I guess this is to say that a sort of level of chain analysis is required with gold.
Yeah.
In order to have a sense of, are you receiving gold? It's because of the counterfeit problem. Whereas Bitcoin obviates that. And so any chain analysis is because someone is trying to project on it and get in the middle of people's free trade, which is totally unacceptable, of course.
Yeah. All right. Well, we're at 45 minutes now. So I feel like we discussed a wide range of topics related to Bitcoin.
I think everyone already knows numbers going to go up at some point. Of course, if on Halving Day, which I think this is when this will air, if Bitcoin is not at 100,000, then all of us were completely wrong about everything we knew about Bitcoin, and that you gotta hand in your card, and no more Bitcoin.
No more. It's weird because this halving is getting hyped up way more than the previous one. So I think it's because there's 10 times more people in in Bitcoin in the industry. But it might also be because of Saifedean's work and Plan B's work also contributing to that. So
well, then we've also now had 2 rounds of halving and price go up.
Yeah, and there's a common saying, 3rd time's the charm, right? And I think
I'll rub my rabbit foot and go rub the belly of the Buddha and
pray for hyper Bitcoinization.
Yeah.
All right. Thanks for tuning in. Subscribe to the Noted podcast. Go to noted.org, NODED. And we're on the iTunes podcast store. You can also find us on SoundCloud. On Twitter, we were at Noted Podcast.
We got gulagged.
By
the Twitter commissars.
Yeah, the communists. They're at it again. But Michael and we're still on Twitter. So congrats to us. You can follow Michael at Bitstein, BITSTEIN. Everyone should know how to spell that, right?
You'd be surprised.
Yeah, do they flip the I and the E?
Yeah, that's the common one.
Yeah. I before E, except after C, except for Bitstein.
Yeah, it's totally confusing.
Um,
There's
and
Germans. Blame the Germans.
yeah, mine's no better. At Pierre_Rochard. Um, and I won't spell it out because it's too long. Too many R's, too much brr. That's all right. All right. Enjoy the halving, everyone.